Welcome to the Real Estate Collective's education series. In this session, we're sitting down with Micah Landis from Mountain View Financial Advisors to talk about homeowners insurance and common inspection issues. Please remember, this video is for general informational purposes only. For advice specific to your needs, consult your insurance provider.
Good morning, everybody. We are the Real Estate Collective. We're Representation Redefined. This is the first of many in our education series. We really enjoy being a trusted resource for our clients. And today our speaker is Micah Landis with Mountain View Financial. He is a fee-only financial advisor, but he also worked for years in the insurance industry and is a wealth of knowledge. We've got a lot of questions from our clients that come up regularly, and some of the answers may surprise you. So with no further ado, Micah.
Great. Well, I'm honored to be asked to speak on your first of many great educational events. So yeah, I do have a background in insurance, over a decade's worth, and I still review it frequently in the business that I do as a wealth manager. So to keep us on schedule, we can definitely kick it off with our first questions. I believe that Erika, you're first up to see what we have.
Yes. First off, what do people assume is covered by homeowners insurance and are surprised when their claim is denied?
Unfortunately, a number of things. That's the surprise part of it. Where the confusion can begin with homeowners insurance is that the home is what is insured, right? So that is foundation up, which generally will exclude your landscaping. So if you have damage to landscaping that didn't stem from the issue that came from the house, that is a common space that is damaged that can cause some issues, especially if like your lawn is damaged because the fire department responded. That is one that kind of surprises people. Also, the fire department generally charges a fee to respond to like a home fire, and not all insurance companies cover that. So that's something that is there. One of the ones that is common for, let's say, your population in your profession is that if you are a business person and you're claiming part of your house for your tax deduction for your home office equipment in that space would be excluded from a typical homeowner's insurance policy. So the computers, printers, the furniture, things in that space should be covered under a business owner policy and can be deemed like the laptops specifically, or cameras, or the full setup of speaker systems like I'm on and you might be on at your home offices. That stuff can be and is often excluded from a homeowner's insurance claim.
I want to ask a follow-up. Micah, I had clients, same storm, 3 different properties damaged. 2 homes were covered, 1 wasn't. Can you talk to us about water damage that comes in different directions from a storm?
Sure, absolutely. So water, there's a defined definition between what's considered water claim and what is considered a flood claim, right? So if water lands on the ground and then makes its way into the structure, that is a flood and is covered by flood insurance, which is not covered under most, if not all, homeowners insurance policies, specifically in the state of Nevada, but in most states. So for instance, if you had water coming off of your roof, it went down the side of the house, hit the ground into, say, a planter, and then it seeped into the framing of the house and destroyed your kitchen that way, that would be considered flood damage. It would not be covered, most likely, under a homeowner's insurance claim. However, if your, say, upstairs window is open and the rain came in that way, that is water damage. Or if it came through the roof into the house, that's water damage. So the defining point is if it touches the ground at any point and comes into the house, it's flood and therefore is excluded, unless you have a flood policy, which is a separate thing.
Yeah.
Yeah, absolutely. And Miriam, did you have a question for me?
Marian fell off, so let's go to number 3 and go back.
Great. Okay. Then let's see, Nichole, what questions do you have for me?
Perfect. I have the question, if a homeowner isn't required to get flood, fire, or earthquake insurance, what happens if there is damage from a flood, fire, or earthquake?
So when you are thinking about the risks of really anything, business or home, you want to think about it in the 3R context, which is reduce, redirect, and retain. So reducing is to make your house less likely to be subject to damage. There's a lot of ways of doing that. We won't get into that. Redirect is redirecting it to an insurance company. Your primary homeowner's insurance policy will cover what is defined in the declarations document, the declarations page, otherwise referred to as the policy documents. That's where the fine details are spelled out. It's not just the cover. So let's say you have a policy and you are not in a flood zone or in a specifically designated fire zone by the insurance commission, and yet you have a fire that came outside of your property into your property. Well, at that point, you've retained that risk personally, and therefore you're subject to it yourself. And your HMA might require you to rebuild or repair the damage, in which case you would be out of pocket to do so. Same thing with flood. If you're not in a flood zone and therefore required to carry a flood insurance policy, but you have a flood, it would be most likely declined under your primary insurance to the most part, and you would be out of pocket for that. Same thing with earthquakes. It's not particularly common to have earthquake coverage in Nevada, as it is in other states like California. If there were to be a rare earthquake here with damage, almost all policies in Nevada and most other places that are not prone to earthquakes, you would be subject to that yourself because it's the origin source of the damage. So most likely you'd be on the hook yourself. So we would want to talk to your insurance advisor about having those coverages. Great. And then Erin, do you have a question for me?
Yes. The question I received, I will read, and then I have a follow-up after you answer the first round.
Sure.
How does the insurance company know the value of the contents in my home, and are certain things not covered like jewelry and art?
Yes, certain things are not covered or more likely limited, but how do they know what's in your house? That's always an interesting question. So it varies very widely by which insurance company you're working with and specifically which insurance claim adjuster you're working with. My recommendation is to keep receipts for anything over $1,000 if you can in one of your safe deposit box. But frequently, and I would like someone to do this annually, is to simply walk through their house with their phone and record what it is they have, because
Recording in progress.
statistically, people will forget 40% of what they own after a tragic, say, fire. They won't remember all the art, all the shoes, all of the things, and they will underclaim and therefore be under reimbursed for what they have. Watching that video and showing that you really do have the Jimmy Choo shoes and you do have a 75-inch TV and you do have whatever it might be, it, one, refreshes your memory, two, proves that you have it, and three, it's direct evidence to the claims insurance adjuster that if it really came down to being adjudicated, that you have proof and it's more likely to be settled faster, especially for whichever version of replacement cost that you might have. And then the second part on the jewelry and the art. So jewelry, almost all policies, unless you have a specific jewelry art rider on your policy, you're likely limited at about $2,500 in jewelry coverage unless you specifically schedule that jewelry or art on your policy. Most people look at the cover page of their insurance and they see $200,000 worth of personal property. They don't necessarily understand that there's sub limits on a lot of high theft items like expensive bicycles, camera equipment, jewelry, art, antiques, things like that, especially if it's an antique that's hard to get a valuation. I recommend at least annually having your art and your jewelry be appraised by your local jeweler so that you have it on file. Therefore, you can prove that you have it and you can have it scheduled, and it's relatively low cost and it extends the coverage to outside of the house. So if you travel with camera equipment, with jewelry, with purses, if it is stolen, taken, damaged somewhere in another country, you still get full replacement costs and usually waives the deductible.
Interesting. So, in evaluating my own homeowner's insurance, I look at it annually, and I notice that the contents replacement number is quite high. I do not have that much in contents in my home. So I'm hearing I should be documenting everything, but in like the real world situation where there are claims, do insurance companies typically honor that number? How does that work if there is a claim?
Generally, people don't have that amount of coverage. And so it seems really high comparatively. What happens is that in most states, the insurance commission creates a set of rules that everyone abides by in order to make some uniformity across the policies. And so the rule out here in Nevada is that 75% of the replacement cost value of the house is your property coverage. So they're not basing that on what you actually have. It's a strict formula. 10% is coverage for ordinance replacement for upgrading your house to current law, 75% for personal property, 10% for properties outside the property. So it's a formula that's worked out. In the end, it's likely too much, but you don't have that much, and it really comes down to what you can document and then what is specifically excluded or needs to be then scheduled onto the property. Yeah. Fairly inexpensive to schedule jewelry. It's an undervalued thing. I highly recommend people doing that and adding some other coverages on there that are great, like medical coverage. People don't think about that, but usually the default is $1,000 worth of medical coverage. But if you are a person with kids that have people at the house quite a bit, it can settle a lot of disputes if you have, say, $5,000 to $25,000 worth of medical coverage to cover another person that gets injured at your house without having to file a full liability claim. The medical pays out almost immediately, and it really doesn't adjust your future insurance costs. Yeah.
Thank you.
And then I think Alexis, you might have a question for me.
I do, and then let's circle back to Marian. My question is, can you ever be denied homeowners insurance coverage?
You can be denied. There's a few factors in play there. You can be denied for a number of reasons. One, let's say you go with one of the main street insurance companies like the State Farms, the Farmers, of the world. They will look at your previous claims report, otherwise referred to a CLUE report, and they will look at claims on properties you used to have. And they use that as an indicator. Plus, they use other multiple factors. They don't directly use your credit score, but they use another formula that's proprietary to each company. They can look at that and either make it so expensive that you would choose not to take it, or they can flat out decline it because it doesn't meet their standards. If that happens to you, which can happen, if somebody who, out of unfortunate luck, they have multiple claims in the prior 3 years, or the house they're looking to purchase or have has had multiple claims, a lot of companies will flat out decline to cover that. And you might have to turn to a insurance broker, the bigger ones like Brown & Brown or Craig & Pike or Assurant, to have them shop it out to a bunch of other companies that specialize in these higher claim, older, more unique properties. So it definitely increases the premium and increases the effort that goes into that. In terms of canceling the claim that's already in existence, they can't do that to you necessarily individually unless it's because of a claim. They can do it on a class basis for a general region, like if they're going to cancel for everybody in the mountains because of fire, for that type of reason. So if it's not tied to your individual claim history. Yeah. Okay. And did you have another question regarding I think it's home warranty coverage?
I think we're going to circle back to me. And perfect. With the age of the homes, we are seeing a lot of sewer lines being torn up in front of the house. My question is, does the homeowner's insurance cover the sewer line from the house to the street, or is that additional coverage?
That is another big surprise that often happens with homeowners is you think of your home as the property line and in, when the home covers the foundation and up. So the sewer line and often the water line are generally not covered, and separate insurance policies are sought to cover those in the event that you want to not retain that risk yourself. So I would not necessarily respond to the ones that come in the mail immediately after a purchase. I would do some independent research on that because sometimes those can be fraudulent in nature. But what often happens is that the water line depends on when it was built and where it was built. The water lines or sewer lines can run underneath the patio, or I mean, underneath the driveway of the house to the foundation or through the foundation. If the house settles in such a way where it breaks that line or impinges that line and it breaks, you might have to pull up your driveway to repair that. And that would be something that can run into the thousands of dollars that is not generally covered under homeowners insurance. Same with the water line, especially what I've seen in Vegas where they would have a driveway and then tree and driveway and a tree. Sometimes they would plant that tree close to or on top of the water line. And as the tree grew 10 years later, the roots wrapped around and broke that water line or broke that sewer line. And then you see this like mushy area or water coming out from underneath the driveway. Again, something that would not be covered because from the water line connection in the street to the foundation is a separate issue. Yeah. So it's fairly inexpensive. It's like $6 a month in my recollection. I did have that coverage because I have seen that happen multiple times. And generally, when you see it happen to one house in a neighborhood, you would want to make sure that the people in that neighborhood also have coverage because it means that they may have systematically planted trees or issues or put the lining underneath the foundation where it settles. So if it happens in one neighborhood, it's more common in that neighborhood than another neighborhood. Yeah.
Great info. Thank you.
You're very welcome. Lost your sound, Alexis.
Yeah, Marian, I think you were going to lead us on the next part, just the common issues we see in home inspections, right?
Yes. So one of the things that I always tell my buyers is if there's a reverse osmosis system underneath the sink, to make sure that the home inspector takes a really good look because they're infamous for leaking. You can't see the leak usually if there's no leak detection because the drum of the RO is usually pretty big and it leaks from the bottom and it intrudes behind the cabinetry onto the drywall. And a lot of times there's mold. So that's one of the things I tend to look for if there's a kitchen island with a sink on it to make sure your home inspector really gives it a good go to make sure there isn't any underlying damage that you can't see.
Micah, insurance-wise, say somebody bought that house and there is mold in the wall from a slow leak. We talked about this last night and like your response kind of surprised me. Can you elaborate?
Sure. So the idea of insurance in this set is that it is sudden and accidental, right? There's a primary idea. So if you have a water line that bursts from an RO system and it causes water damage immediately and it's discovered, that would typically be considered a claim that is covered, right? But if it is a slow leak and it creates greater damage and then it creates mold, which most policies in most states exclude mold as coverage, it is accidental, but it is not sudden, right? Because it is a slow leak over an extended period of time resulting in greater damage. And so that can easily be declined for coverage. They may come in and fix the leak, but they won't fix necessarily the damage resulting from the leak because that doesn't fall under the definition of sudden and accidental. So that is something to take into consideration, to look for any place where a slow leak might exist and to review that area frequently. Because you can run into issues where mold and things are not covered in that sense. Another area that I think it gets brought up frequently is there's a misunderstanding between sudden and accidental and wear and tear. People get surprised to find out that homeowners insurance policies don't cover wear and tear on things. So when they break, they think, well, it's part of the house. But if it's not sudden and accidental, it's wear and tear, then it can easily be declined under a homeowner's insurance policy, would land under a home warranty policy. The mold wouldn't fall under the home warranty policy, but wear and tear does. So any area where you have drips, I would recommend that. I would also recommend anything that can detect water leaks in your house at the main water line. If you're gone and suddenly you have water moving through your main water line, then you want to indicate on your phone or as fast as you can, or have someone check in on it.
I will say too, as my home is aging, I get a home inspection at least once every 2 years, often once a year. And I bring in the home inspectors that have whatever that gun is, where they can look for moisture in the walls, because sometimes you literally can't see it if it's a pin drop leak. And so that's one of the ways that I just help maintain an aging house and fix the things that I didn't know were problems. And I didn't realize from an insurance standpoint, like how completely hosed you could be if you aren't catching those things.
Yeah, it's fairly common to find out that there was a leak that resulted in damage in, say, an attic or under cabinetry or something along those lines, and then you didn't discover it and it results in mold, and so they will come in and fix the leak, the actual piece of machinery that broke, but the resulting damage to the flooring stuff can easily be excluded, or at least have your coverage reduced fairly dramatically after your deductible. A few other coverages that are covered. I know we talk a bit about coverages that are not covered. Few areas that are covered that people are a bit surprised by is the liability insurance. So say you have liability insurance of 100,000, 300, a million. I would say probably never have less than $1 million if you can have that as an option. Say you are out and about and you cause damage somewhere else, and you're not in a car and you're not doing what you're doing on behalf of your job, that liability does follow you. An example would be you're at an art exhibit and you accidentally knock over a statue and it costs $50,000. That would stem back to your homeowner's insurance policy.
Oh, wow.
Yeah. So there are ways where your liability can trace back to your personal coverage, even if it does not exist, even if the incident did not happen on the property. And same thing where your liability would exist if, say, you had a dog and the dog left the property and ran down the street, that would still stem back to your liability. So it doesn't have to happen on the property. There's some things that have to be on the property, and there's multiple things that they can happen off of the property and still be covered under your policy. So it's good to understand what liability truly covers.
So if I can just add on to that, Alexis, I love the idea that you're getting your home inspected. One thing that we've done is have our sewer scoped, our sewer line scoped, kind of in relation to the fact that that area is not covered. Our neighbor, maybe 3 houses down, had a toilet backup upstairs. It completely flooded. And I really don't want to discover a sewer problem that way. So, we had the scope done and made sure that the line was nice and clear. There weren't any kinks in it. As we see the tree roots growing and our homes are getting older, it's more and more of an issue, and something that we've also encouraged our home buyers to do as part of their home inspection.
I think I also agree that that's a great idea. Something I'll add on to Erin's comment is that was not as common in Nevada. It is very common in some areas and definitely in other states. If there is growth inside of the sewage lines and maybe there's a big flooding of water from a storm on the exterior of the property, and water backs up into your space, laundry rooms, basements, things like that, then that can actually be excluded unless you have something referred to as sump pump coverage. It's that backup coverage, that water backs up into the property can be declined unless you have that. So if you're in a situation where water can come into the house outside of the regular toiletry and showers, then very inexpensive coverage, but pretty difficult to fix if you don't have it. If you have a situation like that in any residence, I would look into having that coverage.
Erika, do you have a question or just things you see in home inspections?
Yeah, I think that's what we were going to share, is just a few items that are commonly called out on home inspections. One that I often see noted is the exhaust fans in laundry rooms and bathrooms, which is also one of the main causes of home fires, is the lint buildup. So we always suggest replace those every few years and clean them regularly to prevent that.
Definitely.
Yeah, that was new. I had no idea. Her husband's a firefighter. That one, I was like, whoa. Marian, did you already talk about home inspection items?
I did. I did the kitchen island.
Oh, yeah.
I do
Oh.
have another question for Micah
Sure.
on we were talking about sewer lines and water. What about foundational leaks or leaks that are subterranean? Is that covered under homeowners insurance?
In terms of water lines breaking under the house, inside
Correct.
of the foundation?
Mhm. Like if it comes up through your tile, is the cosmetic repairs, are those covered? Is the leak covered in any scope? What is covered if you have a foundational leak or a subterranean leak under the house?
So always reference to your specific policy to find out, and it really depends on what era the house was built as to whether or not that's put into the foundation or built in a way where it's not likely to crack inside the system. That being said, you always want to look at the origin source of whatever the incident results from. So if the water was inside the foundation or inside the house, it's construction, and then it causes water damage because let's say the pipe breaks and then it comes up through the wood floors because cracks have been forming that were unbeknownst to you, that is likely to be covered. And I say likely because it comes down to the specific policies. But again, it's going to come down to if it's because the house was settling or some other thing that is subject to some construction default claim that was supposed to be fixed. But in that situation, since it's inside the foundation, it's inside the house, and that came up through the house in that sense, then that is likely to be something that's going to get covered. If it's not, it's going to be considered water damage, not exactly flood damage, but water damage. So I would look at communities, the houses in that general time frame, in that general area, especially if you can identify the builder and see if they've had claims like this in the past. If you can ever get your hands on the claims report for a household before you're going to buy it, then that's always a good idea because it will give you an insight into what maybe happened in the last 5 years of that house or houses nearby. Yeah. Always good to have information as a tool at your fingertips whenever you're trying to make as colossal of and expensive as a decision as purchasing a home. More information is better, and rely on the experts, like the experts in this room right now, to help guide that, and that includes uncovering what is unknown at the time, like previous insurance claims, like things that have issued with the builders in the past, like settling of dirt in that specific area for that community. If it can be discovered, it's worth doing a little bit of digging.
Fantastic.
Yeah,
Thanks.
absolutely.
Nichole, what do you see on inspection reports?
Well, I don't know that this is on inspection reports too often, but with EV vehicles on the rise, it should just make sure you have a licensed electrician install the 220-volt outlet in the garage. We just had an experience right down the street, a couple doors down, that our neighbor thought he could do it yourself and install his own electrical outlet for the vehicle and scorched his entire garage that's still being rebuilt. So I guess maybe the follow-up big question to that would, if it like, would the claim be covered, or would it be considered accidental if you're doing do-it-yourself projects around the house?
That's a bit of a gray area. So the way I'll answer that is if you do it yourself, but you do it correctly to code, and there's still an incident, you're likely to be fine. If you do it yourself, but you do it yourself, and you didn't want to read the instructions or know what the code is, and you just decide to do some DIY electrical without understanding how that works, then there's an opportunity for insurance company to say, well, that wasn't prudent to do that, and therefore we're not going to give you full coverage for that. The same would come into play if you hired a contractor that wasn't licensed and bonded to do something. If they did it correctly and that was fine, then you're still likely to have that claim covered. If you hire somebody and they do it incorrectly and they're also not insured or bonded, then you're going to have issues with the insurance company, because typically if the contractor did something incorrectly and it caused the insurance company to pay, then the insurance company would subrogate. They would go after the insurance and the bond of the contractor to reimburse themselves to cover that claim. If you use somebody that is not licensed and bonded and they didn't do proper work, there's really nowhere for the insurance company to go, and they're not too keen on covering that in that instance. So I would not install a 220 EV charger in your garage unless that was your profession.
Sure.
Yeah, as a general rule. No, stick to your wheelhouse a little bit and just understand that that if you can get that vehicle, you can probably get the plug.
Yeah.
Yeah.
And pay for the proper outlet. One of the things that we see really regularly in inspection reports are cracked and missing roof tiles. Because really the winds and our storms will take a few off, or say there was a small leak at some point. When you've got anybody walking on your roof, the chances of them cracking tiles goes up. I mean, it's just there's nowhere else to really step. And we always advise have the roof tiles replaced right away, because you go from hopefully a non-issue to what could become a really big issue by letting your roof be exposed. And I guess what we've learned today is about sudden, right? If it's a sudden and accidental, but if you know you've got roof tiles that are up there that are blown off, and then all of a sudden you have a leak, I don't see that going well with an insurance company to provide you coverage.
To respond to that, your assumption is correct. It's founded on solid logic, because the idea here is that you have a responsibility as the policy holder to maintain your property in a condition where claims are a prudent person would assume that they would be unlikely or less likely to happen, right? And so leaving tiles out that you were aware of or should have been aware of, right? So it's you are aware, and that can be proved, or you should have been aware because it's visible from where you park. Then the insurance company can say, well, you didn't maintain the house in a condition that would inherently prevent obvious damage. It's like saying I took my expensive couch outside into the yard while I was doing some remodels, and I let it out there, and then it got damaged by the rain, so I went to the insurance company to cover that. Be like, well, that wasn't prudent. You didn't cover it, you didn't maintain it, you didn't store it properly. The same goes for if you have, say, a fire damage in your house, it's your responsibility to secure what has not been damaged as best that you can. And most insurance companies will pay for that transport to a storage unit, as opposed to just letting the rest of the house get damaged while other things happen. There's a responsibility to limit damage if that's prudent. Limiting damage includes replacing tiles and not leaving things that are obviously going to get damaged by a prudent person would assume they would get damaged. So some responsibility lands on both sides of that equation.
I have a follow-up question, or just another one. You see in older homes, I know we had one in our house as a kid growing up. Seemed like, oh, it's so convenient, where my dad wanted access to the attic via the garage, right? So you had the guy come out, cut the hole. You had the old stairs like from Christmas Vacation, but it was in our garage, and you could put the Christmas decorations up there, and it was just super easy. Well, now that I'm in this business and I understand like fire-rated walls, you see that. Let's say there is a garage fire, and then all of a sudden you don't have that fire rating protection because the fire can get up into the garage and through the attic. What would an insurance company do when they realize maybe the fire spread so much faster because you had this handy gadget in the garage that wasn't up to code?
Yeah, that is definitely a concern. Anytime you step outside of what is the legal building code for something like a garage door that doesn't auto shut, or cutting through a fire wall, or doing electrical in a way that is pulling too much power out of a particular fuse, things where you deviate from what is considered the standard way of doing something, you then expose yourself to limiting or exclusion from a claim because of that, right? So the question is going to come down to, in most cases, it's going to come down to the origin of the source of the fire and whether or not that hole in the ceiling was contributory towards greater damage than would have otherwise occurred. So if you have a garage and then there's fire over here and damage over here and the holes over here and really had nothing to do with it, you're not likely to have your claim decline because that had nothing to do with this, even though that's not the code. If, however, this got into the attic and caused much greater damage because it wasn't contained to the space because the code was violated, then yeah, you're certainly going to have a much more difficult time. And I say this to the extent that there is variability amongst insurance companies and amongst policies, even though there's a strong sense of standardization on policies, especially for personal lines, consumer-facing policies. The adjuster and the claims adjuster and the insurance company and the language of the policy itself do deviate in some important ways. A lot of the answers to your question will come down to the appetite of the adjuster and the claims person and the insurance company. So one thing I would add to that is that look for insurance companies that have very strong financial strength ratings, and have a strong presence in your state, because if they are struggling financially, they're more likely to just deny everything. And if they are not appointed in your state, if they're a non-appointed carrier in your state, that's less likely to have footprint in the state, which means you're going to be working with a third-party kind of subcontractor to do your claims. And in some ways, there's a bit of a conflict there. So.
How do we know if they have a strong financial rating and if they're appointed in our state?
Sure. So every insurance company needs to be appointed or not appointed in the state they're doing business. You can find that out through the Insurance Commission. If you're buying insurance in the state of Nevada, or I would imagine this to be any state, you would have to sign a special document that says this is a non-appointed company, right? And appointed also means that a portion of their premium goes into a general fund to cover when a company goes default, right? If they're not appointed, they're not paying into the state fund, and so there's less coverage there. And so there's that. The other part is you can look up these Standard & Poor financial strength ratings, the AB. I'm blanking on the name. There's three major rating companies. There's Weiss and Weiss. There's AB, I'm blanking on the rest of it, and there's Standard & Poor. Each one provides A plus superior or something. They get reviewed annually and then rated on their financial strength rating to see that they have enough resources and staff on hand to actually handle a claim under various stress test scenarios like they do with banks. Like a hurricane or a tornado or a massive fire in a full community, something we saw like in California, when you have a stress test where there's multiple claims at one time, do they have the ability to respond?
So Micah, if we wanted to add, I want to add flood insurance and I want to add fire insurance and I think I want to add sub-pup insurance and I want to add insurance for that line. So do I just reach out to my insurance agent or do I have to go to specialty places for those?
Typically, you're going to be looking, some insurance companies do have add-on features like scheduling of personal property. They do have the ability to add earthquake coverage. Now, fire and water, like flood damage, and fire from a forest fire that comes onto the property, because fire is similar to water. If it comes from the property, that's normal damage, right? But like a forest fire coming from exterior of the property onto the property, that is a fire, as opposed to like a forest fire, as opposed to a house fire. And so those coverages are different things. You would likely need to find specialty companies for that. The sewer line and the water line are almost certainly specialty companies. The flood policy and the fire are almost certainly specialty companies. Scheduled property, some earthquake, those are usually covered within the policy itself as added features. Same thing with sump pump.
Okay.
And additional medical coverage, umbrellas, things like that.
Oh yeah, it just sounds like a small amount of money to give you peace of mind for what could be a really expensive out-of-pocket problem.
If you're not in a flood zone and you have the normal elevation and you have your house is structured the way they will measure based on the zoning of how their house sits, once you contribute all of that information over to the flood policy, it can be very inexpensive because it's less likely to happen, right? And then sump up coverage, $5, $10 a month, something to that effect, to cover for something that could be a $10,000, not sump pump, I'm sorry, water or sewer, could be a $5,000 to $10,000 repair. So, wherever you land on the spectrum of retaining risk or to redirecting it to an insurance company is a very personal decision. Some people want to just self-insure everything to the extent that they are legally allowed to. Other people want to insure everything. And so there's a spectrum of the three risks. First, reduce it. Don't have trampolines and dogs that bite people. And then you redirect to an insurance company if you choose to, or wherever you want to redirect it through legal contracts. And the last one is you retain that risk. And if you retain that risk, just understand that you need to have the financial wherewithal to retain that and be realistic about what that could potentially cost.
Micah,
Okay.
thank you. Do we have more
Quick
questions?
question.
Yeah.
Yeah. I have a question. From a practical perspective, I mean, the whole insurance landscape has been really changing and evolving. And I personally have been notified about changes to my both auto insurance as well as my homeowner's insurance. I think one of the companies, it's being transferred to another. Like, where does the average person start when shopping for a homeowner's policy? Are we back to the days where we need a broker? Is there,
Personally, I do think the expertise does need to be in that space. There's an idea that the more information is better, and we can do a lot of this online. The reality is it's hard to interpret what the things mean. It's much like real estate. It's hard to interpret what the reality is versus what is written. And there's a lot of nuances and there's a lot of considerations and ideas that need to be fleshed out that you have those conversations with your clients as a real estate professional that a broker can do. So I personally think that a broker does have a good position to play or role to play in this role. I would start out with, do they have a footprint in my state? Are they appointed in my state? Do they have a strong financial strength rating for the company itself? Then I would assess the actual risk that posed for the property itself. Like, do you have a sump pump? Are you on an elevated or are you on a hill? Are you near a forest? You know, how old is the property? You assess the personal risk, and then you go through and you look at every risk that could exist and figure out whether or not you want to insure or not insure those. The first one is, don't just assume your insurance policy covers everything. Really assess the risk of your house and then make the decision about what you want to cover or not, because you don't have to cover everything. But it's best to know that you're not covering something than to think it's covered and not be covered, which unfortunately happens quite a bit. So, yeah.
well, I don't know about you, but having this conversation, I'm like, I need to go back and make sure that I have a fire extinguisher readily available in my kitchen and my garage. No penetrations, no compromise of the firewall in the garage. I've seen where people have been called out on home inspections where they add the little door stop in your door between the house and the garage. And if that was left ajar and there was a fire in the garage, that could affect your ability to maybe get paid by your policy, which, you know, we don't want to give insurance companies any excuses not to pay us.
Yeah.
Is there anything else that anyone in the group can think of as just your day-to-day maintenance that we haven't covered, or just things, a little checklist? Okay, well, I think this has been a really productive session.
Great.
And I know I learned a few things. So,
Very good.
Micah, thank you so much for joining us and
Thank
being
you
a
for the
resource for
invite.
us.
I'm happy to speak to this. And then if there's any follow-up questions later, feel free to reach out to me. And I appreciate everyone's time.
Thank you so much.
Thank you for watching. We hope you enjoyed learning about homeowners insurance and common inspection issues. For exclusive access to future education events and our newsletter, text your agent or sign up using the link below.